Some states still tax Social Security benefits. Some states tax retirement benefits, pension, IRA withdrawals, 401k withdrawals. I'm not talking about federal taxes. We all have to deal with federal tax. I'm talking about states that are taxing these. Let me bring in my co-host, Tony Shore. He lives in a state that actually taxes retirement benefits. So let's talk about taxes today, Tony. And I want to bring it to the Japanese baseball player that recently signed with the Los Angeles Dodgers in a moment.
Okay.
But first, because this is interesting stuff.
Hello, Dan. First of all, hello. How are you? I'm great, by the way.
You're on the defensive already because you're going to have to try and defend Minnesota and their taxes. But
I'm probably not going to end up being try too hard to defend Minnesota. I do live in a high tax state, but I have a question for you, Dan.
What is your tax plan? What is your tax plan?
What is the tax plan? We're going to talk about baseball players' tax plan, but generally speaking, people, we've done shows on how Social Security is taxed, right? And people are upset about the fact that Social Security is taxed at all.
Right.
But that's at the federal level, and there's limits. So watch that show if you want to know whether or not your Social Security is going to be taxed. But it also can be taxed at a state level. And there are some states that do it. So let's throw them under the bus. We got Colorado, Connecticut, Kansas, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. All of these states. Now, there was a couple more that just changed in 2024. I think it was Nebraska and Missouri. They no longer tax Social Security benefits at the state level.
Yeah, they used to in Nebraska, and they don't anymore. We have friends in Nebraska. You and I have mutual friends there, and they were pretty pumped about the fact that Nebraska doesn't tax. You have a friend who's a financial planner there, and that makes a big difference when he's planning people's retirement for them, right?
It depends on what the state tax rate is, but certainly it's a factor. You hear about people moving to Florida to retire for the weather, but some do it for the taxes. Didn't Amazon Bezos just move from Seattle to Florida, right? Was it for the weather? Probably. Was it for the taxes? Definitely.
It wasn't for the sane employees, I'll tell you that. Florida man.
Stones.
I'm going to hire a Florida man.
But it's not just Social Security. What about pensions?
Yeah.
State pensions can be taxed. Yep. My father gets a pension from the state of New York. He was a teacher for 37 years or something like that. So he's getting his income from pension in New York, but he's not paying taxes on it because there's no state tax in Florida. He pays federal tax, of course, but he's not paying state taxes because in Florida we don't tax.
Yeah, I was surprised that back to that list of states that do tax Social Security. What really surprised me, I just assumed California would be on there because they're known as everybody talks about how high the taxes are in California, but they're not on the list. That surprises me.
Well, not every state taxes retirement.
Oh, that's true. They don't tax retirement. Yeah.
Right. So California, it has high taxes, but not for Social Security. And so how does that impact? Let's go through the states that don't tax income at all. Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming.
So there's no states where people would actually, so there are no states on that list where people would actually want to live anyway. So then, snap. No, I love Florida. I love Clearwater. You know that.
Yeah, you want to move. You want to retire in Key West. So who are you kidding?
Yeah.
But, Tennessee's on the list. We're going to be going to Tennessee very shortly, Tony and I. So we'll do a show together there.
Yeah, we're going to be live from Nashville, Tennessee. That'll be fun.
And there's a lot of people that are moving to Tennessee and Texas. You hear the headlines. California fleeing to Texas, right?
Yep.
Is it for the taxes? A lot of times it is. Politics involved too, but okay. So what if you?
But you don't hear about people moving to South Dakota or Wyoming.
Do people not move to South Dakota from Minnesota?
Once in a while, you're right. Sioux Falls is since I was in high school, Sioux Falls is probably tripled in size. Yeah. And that's because corporations coming there. So it has grown considerably, but I mean, it's really the only big city in the entire state. So there's that. Yeah.
Now, I'm not suggesting people should move so they reduce their Social Security tax.
Right. That's really probably not enough of a motivation.
Right. And a lot of states might have limits, we tax Social Security, but only if you make so much. Right. So it's not like all of it's going to be taxed necessarily. Each state's different, so they have their different tax codes.
Yeah, Minnesota is one of the worst, by the way. I will say this: my state, where I was born and raised and live, we pretty much tax everything except the only benefit here is there's no sales tax on groceries or clothing. No sales tax on groceries or clothing, but restaurants, prepared food. Everything else has high state tax, and the state taxes everything else like crazy. So, I mean, it's not as bad as California with their gas tax, but they've taxed your Social Security to the full amount. I mean, the full 85% of what you bring in Social Security is subject to state tax in Minnesota. And now there is a scale, but I haven't hit the amount yet where,
Well, you're not on Social Security yet either.
No, that's true. We'll find out.
Will you move out of Minnesota when you start taking your retirement income? What about deferred?
Well, yeah, I'm moving in with you. You've got the guest room.
That's right.
My wife and I will be there.
But there's going to be the house tax. Or a heat tax. You're going to say it's too hot. You're going to have the AC on all the time.
I will.
So each state does tax things differently, and some states tax retirement income, some don't. States that don't tax retirement income. Now, Florida is on the list because we don't tax any income, but state taxes that don't tax retirement income. So we're talking like IRA withdrawals, 401k. They carve it out, meaning we don't tax retirees. Illinois, Iowa, Mississippi, and Pennsylvania.
Are you saying those state taxes even a tax deferred account?
Right. So
how does that work? Taxes. So I can put money into an IRA tax free, and if I live in Iowa, I can pull that money out in retirement and not pay taxes on it?
Yes. So you could
put it I didn't know that.
Tax deferred. And when you take it out in Minnesota, you pay state tax on it. Oh, yeah. When you take it out in Iowa, you do not pay state tax. Now, you're still paying federal tax, Tony.
Yes, yeah, that's true.
I'm going to bring that up there because I know you were going to fall for that. You're still paying federal. So it's not like, I'm going to move to Iowa.
Yeah, I was packing my bags. I was starting to pack over here, pack my records up. And I'm like, hey, I've made fun of Iowa all my entire life, but I'll move to a cornfield to avoid paying all my taxes. Sure.
Yeah. No. Well, you can move to Pennsylvania and do the same thing, and you got your doppelganger Fetterman as your senator.
No, that's
all right. No. I'm not going to go there. So
yeah, please, Dan.
So I got this information from this article here, so people can read it and look at the states if they went too quickly for them. I know a lot of fans they go back and rewind and put us on slow motion. And then when you talk, they speed us up to 2 times. There's a little tip for you. If you're watching on YouTube, you can speed up if we're talking too slow. But I want to get
here.
Taxes. I hate taxes, right? My mom worked for the IRS. She was an auditor. And I always tell the story of when my brother Jim, if you're watching, Jim, he gave me a fake lotto ticket that was 10 grand winner. Right. And I was so excited about it. And I called him and he wasn't available. And I called my mom up and said, Mom, I won 10,000 on a scratch off. I was in Minnesota at the time. And he sent it from New York. And first thing she says is, how much? 10,000. She's like, that's before taxes. And I was like, what are you like? Can't you say congratulations or isn't this great? No.
Your mom
immediately threw the tax gauntlet down. And then I called my brother and he's like, well, how do you send it in? What do we do? It's in New York. I'm like, I don't know. You sent it. He's like, read the back. And then it said, send it to your mama's house, care of Santa Claus. So I was upset by that. But so I grew up not only fighting with my brothers, but also
yeah,
paying taxes.
Your brothers are something else. I'll tell you that.
Oh, it's fun. It's fun.
Oh,
so
sure.
I saw this article. So if so one of the key pillars of my job is retirement income planning, and taxes are part of that. Taxes, estate planning, income planning, investment planning, all of those things go together, and taxes are a huge part. So whenever you're planning your retirement, you want to factor in taxes. And a lot of people don't realize that some states tax retirement income and some don't. So it's important that people know that. And I would say that this brought it to light, and it's very fascinating. So for those that aren't baseball fans, I'm not a baseball fan. Last time I watched a baseball game in like a team and followed it was 1986 Mets. They were my team. So they won the World Series. I think Buckner. Yeah. Anyway, in Massachusetts, my wife.
The next year, the very next year, the Twins, my team won it. So
well,
in '87.
So anyway, currently, 2024.
Wait, the Mets won a World Series? Huh.
2024. I don't know how to pronounce his name. Shohei Ohtani.
Yeah, I think that's
Japanese.
Shohei Ohtani.
He signed a gigantic contract with the LA Dodgers in 2024. $70 million per year he's going to get, right? But here's the catch. It's beautiful. I love this. As Trump would say, it's beautiful, beautiful. It's the most beautiful contract ever. He's taking $2 million a year now for the next 10 years while he's playing. And then when he's done playing, theoretically, in 10 years, he's going to take $68 million a year for the next 10 years. So he's deferring the income on this, right? And so and no interest. I think it was Barry Bonds did, and I forget who did it, Bobby Bonilla, somebody did with interest, 8%, and they're still paying for it, the Yankees or the Mets or someone like that.
Yeah.
Showing you how bad I am with sports, baseball. But he is deferring his income, $68 million a year he's deferring. So $680 million he's not going to touch until 10 years and go on. He's not getting interest on it. So the time value of money, I'm like, you're crazy. What are you doing? Invest it. Take it now and invest it. But here's what. There's this California state income tax, and he'd be a California resident playing for the LA Dodgers. 13.3% state income tax on that money, plus an additional 1.1% disability insurance tax.
14.4% tax.
14.4%. He would have to pay, and he will pay on that $2 million. But he's not going to pay it on the $68 million until he claims it in 10 years. But in 10 years, guess what, Tony? What do you think is going to happen in 10 years?
He's going to move out of the state of California to one of the states that doesn't have the tax.
Right. Or Japan. So
Florida, Japan. Yeah.
Yeah. So let's say he moves to Florida like Bezos did. Think of all the deferred income Bezos got. He has all his wealth, Now he takes it in California. He doesn't have to pay the state tax in Washington. Seattle has its own city tax. So this guy, Ohtani, he's totally thrown the sports world up, and oh my God, a 10-year deferral of income without any interest. What is he? This is changing the world. People do this all the time in private life. It just so happens that this guy's a public figure, sports phenom. And so it's public. And so what happened, Tony? And
it's huge sums of money. I mean, I don't think all the time it's happening with that amount of money either. I think
it is, Tony. All those big wig executives in California making tens of millions a year as CEOs of those high-tech companies out in Silicon Valley.
You may have a point.
You just don't hear about where they're going and what they're doing. Their taxes.
It's just a radio show co-host. I'm on a little different level, so... Right. Just a little below that.
Income for life.
Yeah, I'm deferring income for life. Yeah.
So
my life, my kids' lives, it's deferred.
I looked at this this report from centerforjobs.org, and it said he could save potentially $9.8 million a year in state taxes, which is $98 million over the life of his contract by doing this. So what happens? Right? Smart move. He can pay the big bucks to pay an accountant
Yeah, for California, do I feel sorry for the state of California? Not at all. Tough cookies. If he's not living there when he takes his income, he doesn't have to pay state tax. That's the way it works.
Not so fast, Tony. California State Controller, person heading the tax policy in the state, she came on and issued a press release in January of 2024 saying, hey, this is not acceptable. We need to change the tax laws so that you can't do this. But the problem is, Tony, changing the tax laws is an act of Congress at the federal level.
Right.
So California is like, hey, we created this massive problem for ourselves by having massive state income tax. And he's going to move, and we don't want that. So we need you, federal government, to change it to bail us out.
I would tell him to go fly a kite. I would tell him to go fly a kite because it's like, I mean, why do they feel they have any rights to his income that he's going to take 10 years from now if he's living in another state? That doesn't make any sense.
It does make a lot of sense, Tony. And I can't believe that I'm actually going to take this side of this. I'm not taking sides, but I can't believe first you defaulted to the libertarian type side of leave me alone. Don't tax me.
It has nothing to do with it. It's just you pay tax when you receive income. It's where you're living at that time. I truly believe that, and they shouldn't even have the right to change that.
That's the law. But the case can be made when you earn the income. That's where are you when you earn it. He's earning it now, right?
Yeah, but he's earning it, but he's not receiving it, and you can't pay taxes on something you don't have. It's just like, and that's the argument we made when they said my dad owed $65,000 when he inherited my grandpa's farm, and I'm like, whoa, wait a minute. He doesn't have any he didn't inherit liquidity. He doesn't have that money. He didn't inherit any money. He inherited a farm, and he's going to receive this paltry rent every year, and you can tax him on the rent because that's the income off the land. He's not making any income from the land. He's not making the 80 acres at $10,000 an acre. He's got to pay taxes on $850,000 or whatever the amount is that they would say, whatever they valued it at the time. And if whatever farmland's worth in the Midwest, in that hardy earthen Midwest.
Let me stop the tax dodger right in his tracks here. Everybody's a Scrooge. What you're saying is your father doesn't benefit from the local resources, the fire department and the roads that he takes to drive to his farm.
And he's paying taxes on the income.
Have to pay taxes on.
No, he is paying state taxes. He is paying state taxes on everything he earns every year. He pays full state taxes on Social Security income that he gets, on the rent from the farmland that he gets.
Well,
now if he sells the land, then he's got a cash influx, then he owes the money on the land. But you can't tax something that he never got. You know what I mean? It's like, well, that's worth that, so you owe us taxes on that amount. That doesn't make any sense. That's like them coming to you. It would be like if you lived in Minnesota and the state came to you and said, your house, Dan, is worth, and based on you and your salary, I'm going to say your house is probably $3 million that you would own here. That's about what you'd live in. And they would say, you don't own a $3 million home, but maybe $5. But they would come to you and say, hey, Dan, guess what? And you do pay property tax, and that's a lot. But they'd say, you know what? Your house is worth $3 million. We want the state tax for that right now.
What if I gave it to one of my kids, like your grandfather gave to his son, your dad? That's a transfer of that asset. There should be taxes due, Tony.
Yeah. Well, it's not farmland. Farmland is a unique, what they call special circumstances.
Save the farmers. No offense to the farmers out there.
Yeah, you better watch yourself. There's farmers in Florida too, Dan.
Of course. But here's the deal. This controller for California is trying to carve out a special rule for high earners. So everyone's subjected to the same rules in California. If you leave, you only pay tax when you earn it. So he's just like, I'm just playing by the rules. And she's like, well, that's not fair. Because let me show you, Tony, from that same report earlier. I'll put it right back up here for those that are watching on YouTube. This is what I'm referencing. High earners in California with adjusted gross income of $1 million, which is not unreasonably high.
No, not in California at all.
Right? Adjusted gross income of $1 million or more, they account for only 0.9% of all tax returns, but they pay 49.2% of the tax.
Mm-hmm.
So, and then you take this mega earner who represents 0.05% of California residents. Those people in this guy Ohtani's world, I think there's 8,500 of them, according to the report. 8,500 people, they pay, I think, a third of all taxes, or 25% of all taxes in the state of Florida, in the state of California. So it's vitally important for this state income to make sure that these people are paying their taxes. And if they're just going to get up and leave,
right,
and not pay taxes, they want to change the rules, hyper focused on high earners in the state of California, to have a separate set of tax rules for this situation. So again, I use this example as hyperbole or as an exaggeration of, because none of my clients are going to have $70 million in a year, let alone their life, right?
Yeah.
So it's not really relevant. But what's relevant is tax codes are very specific, and you got to know them, and you got to follow the rules. And so when you go to retire, if you're thinking, I live in California right now, I'm going to retire, and all of a sudden they're like, well, you know, I don't want to pay income tax on my pension or my Social Security or my retirement distributions. Maybe I'll go to Texas or Tennessee or Florida, South Dakota, something like that. It starts to add up, and you could do it. Anybody can do it. It applies to everybody. It just so happens that it's high stakes when it's someone like a multi-million-dollar baseball player.
That is a fascinating scenario, right? And unique. I didn't know that was happening. I've never heard of a contract like that.
Well, we did a show probably 5 years ago on Allen Iverson, and we talked about how he spent all of his money like crazy. And you brought up the Can't Touch This, MC Hammer, and how he spent all his money, right?
Yeah, right? He made hundreds of millions of dollars off his first record.
And he spent everything. And then Latrell Sprewell, the basketball player in Minnesota at the time, said he was upset because he was getting like 25 million. He's like, I got kids to feed. And it was funny. It was
I remember that line. Yeah. Right? That was classic.
But Allen Iverson, he spent all his money, but the only thing that saved him later on in life when he went, it was a deal he struck with Adidas or Nike or one of these shoe companies where they were going to pay him later, deferred, as like an annuity payment. So that's what this guy's doing. So it's been done before, and it's done all the time. Deferred compensation plans are huge because there's no limit on how much you can defer. There's no
but on that, I've never heard of one on that scale and quite like exactly like that, this baseball player.
But they exist, Tony. You just don't hear about them because they're private people. They're not public figures.
Sure.
And so there's a limit as to what you could put into a 401k or an IRA. There's max. The government only says you can only put in, up to $65,000 in a 401k,
right?
Or a percentage of your income. But when it comes to deferred compensation, there's no limit.
Sure.
So you could do this, and executives do this all the time. They call it golden handcuffs. I'm sure you heard of it. It's golden because it's really lucrative. Handcuffs because, hey, if you leave the company, you're going to lose your deferred income. So it happens, but it doesn't mean that you as an individual can't apply these same principles to your retirement. You just got to know the tax laws wherever you're going. So conclusion is taxes are the biggest expense in your retirement for most people. And if you're building a retirement income plan and you're not factoring in taxes, well, that's mistake number one. And number two is when you're thinking about literally where you're going to retire, just don't make that be the determination of where you live, but factor it in. Make sure you're factoring
it should be something you think about, but at the same time, what we started off talking about were state taxes on Social Security, and just that piece isn't enough to move to a state that doesn't, that's not going to make a big enough a difference to move to a state that doesn't tax it, but it is a factor that has to be factored in with all the other factors, and it may sway you if you're thinking between, wow, we're really close. What's the math if I move to Florida versus what's the math if I move to, a state that taxes it?
Right. And it all depends on where your income is coming from and how it's going to be taxed. But just figure it out, consider it, and pay attention to what happens with this. It would be very interesting. Like currently, our Congress is probably the least effective Congress of my lifetime. So for them to actually carve out a piece in the tax code to handle this California specific issue, probably not going to happen.
Nope.
If it does, I'd be very surprised. But I'd probably be a little upset by it because, like, well, how come we can get that done, but we can't get other bigger issues handled? So,
right. They got bigger fish to fry right now that they don't even have cleaned or in the pan. So
let's fix the Social Security system instead of worrying about California's state code on some ridiculously small number of people that it impacts. Now, some might argue it impacts a lot of people because you think of how many kids can go to public school for free if this guy pays his taxes.
That is a good point, and that I agree with. Yeah, that's where
I thought you'd come out the beginning. So I was expecting a lot more bleeding heart from you when you came right away and said, thumbing your nose to California. I thought, Tony, I'm wearing you down. Eventually, you're going to be
in that instance, I think it's tough cookies for California because they're wanting something that I don't think that they necessarily deserve. Now, do I think progressive tax where somebody who makes all that money should be contributing more like they are? You gave the stats. Sure. And do I want states to tax and have good school systems? I live in a state that is I think we're number 3 rank as far as quality of public schools in the country. And we have high state taxes here, but we do have the benefits. So that's good. But yeah, I mean, I'm not for crazy, outrageous taxes. I think California has got some outrageous taxes, but it's also a very expensive state to maintain. The California budget is nuts compared to other states' budgets. So I got to sympathize with them a bit.
I think your tune's going to change when you hit the big time, when your record labels take off, and when the songs that you record every night they're gonna go big. When Taylor Swift asked you on stage, all of a sudden the money's gonna come in, and you're gonna be like, well, about that, progressive tax system, I think it's a bit unfair. I like the flat tax. That's what's gonna happen. That's what it's gonna take for you to change, Tony. Man, you are corporate greed tax dodging Republican. I kid. Tony, thanks for a good show. Let me just bring my son Jonathan on for a quick, he's got to say something about this.
Dolphin Financial Group does not provide tax advice. See a CPA for tax advice.
On that note, Tony, great show.
Good show, Dan.
We'll see everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.